The war between Israel and Hamas is a complex and tragic conflict that has been raging for decades. The current round of violence has had a devastating impact on the people of the region. At the same time, the war also has the potential to have a significant impact on the global economy, including the Indian economy.
The Israel war has sent strong vibrations resounding through global financial markets, with the Indian stock market being no exception. As tensions increase in the Middle East, investors and traders also find themselves on the border, facing the tension that accompanies such geopolitical restlessness. The Indian stock market, known for its sensitivity to international developments, has experienced remarkable price changes. The war's impact on oil prices, the potential disturbance of trade routes, and geopolitical instability have all contributed to the confusion. In this video, we delve into the factors surrounding the Israel conflict and its impact on the Indian stock market. Israel and Palestine have been fighting for a long time. Now, there's a new problem in the Middle East. A group called Hamas from Palestine attacked Israel, and they are now at war. On Saturday, people from Palestine shot more than 5,000 rockets at Israel from Gaza. This caused a lot of people to get hurt and killed. It's the worst attack on Israel in many years. In response, Israel said they were officially at war. They're taking big military actions to stop the Hamas fighters in the southern towns and attacking Gaza even more. Many people on both sides have been killed. This fighting has been going on for days now. The effects of the Israel-Hamas war on the world economy might not be clear right away, but they could get worse if the fighting spreads to other parts of the Middle East, like Iran. Iran is a big producer of oil, and they support Hamas.
Palestinian militants fired thousands of rockets into Israel overnight in a surprise assault by land, sea, and air.
One way this could hurt the global economy is through oil prices. They've already gone up to nearly $90. If the conflict spreads to other Middle Eastern countries that also produce a lot of oil, it could be a bigger problem. Right now, the world economy is dealing with interest rates that might stay high for a long time. The Israel-Hamas war has had a big impact on the global economy and markets, not just in India. Crude oil prices went up a lot on Monday because of the tensions in the Middle East. Almost 1/3 of the world's oil comes from this region. Brent crude oil went up by 3.44% to $87.49 a barrel, and U.S. West Texas Intermediate crude increased by 3.85% to $85.98 a barrel. Right now, the crisis doesn't immediately expose to danger the oil supply, unless it spreads to other countries in the region and turns into a bigger, more serious war involving the U.S. and Iran. There are reports that Iran might be involved in the attacks against Israel. If there's any payback against Iran, it could be dangerous for ships passing through the Strait of Hormuz. Iran has talked about closing this important passage in the past. If the Israel-Hamas war continues for a longer time, like 2 weeks or more, it could change how oil works. Brent crude went over $90, but then went back down. So we can think of $90 as the point where things get tough for the world economy. India could be affected if the price stays high because of more supply problems. If Iran gets involved, it might mess up the seaways and make transport and insurance costs go up. Higher crude oil prices can also mess up our trade balance and current account shortage, which could put pressure on the Indian rupee.
What will be the impact of this war on the economy of India?
Right now, India's trade with Israel doesn't seem to be immediately affected by the war in West Asia. But if the fighting gets worse, it could cause problems with the things they import from there. India sends about 1.8% of its total exports to Israel, mostly petroleum products. Israel buys around $5.5 to $6 billion worth of these products from India. This year, India's total exports to Israel were $8.4 billion. It's possible that the Indian rupee might lose value, and the Reserve Bank of India might have to take action. In that case, the currency could move up to the 83 to 84 rupee range. On the other side, India brings in machinery, pearls, diamonds, and other valuable stones from Israel. This year, India's imports from Israel were worth $2.3 billion. The unexpected Israel-Palestine war has made Indian markets and the financial sector quite uneasy. It could have big effects in different parts of the world, on economies, and in various industries. Reviewers are concerned that if the Israel-Hamas war continues for an extended period, we might see bond yields go up and the stock market go down. In addition, there's a risk of inflation getting worse if oil prices rise further. Now, Indian stocks are likely to start lower, following the trend of other global stock markets, in response to the Israel-Hamas war that started on Saturday. Fund managers are not stressing right away, but they are keeping a close eye on the situation. If the war spreads, it could have a big impact on Indian stocks due to higher oil prices, increased rupee price changes, and rising bond yields. Last Tuesday, gold prices went up slightly. The cost of 24-karat gold is now 5,835 rupees per gram, which is an increase of 220 rupees. For 22-karat gold, it's 5,350 rupees per gram, up by 200 in the last week. The price of 24-karat gold has gone up by 0.26%, and in the last month it increased by 4.57%. Silver is priced at 6,945 rupees per kilogram, which is up by 305 per kilogram. These price changes are influenced by various factors, including input from respectable jewelers, global demand for gold, currency exchange rates, current interest rates, and government regulations related to the gold trade. Additionally, events in the global economy and the strength of the US dollar compared to other currencies also have an impact on gold prices in the Indian market. Now, let's take a look at what is happening in the Indian stock market. The Indian stock market started the week on an important downward trend, similar to other global stock indices. This decline follows a surprise multi-front attack by the Palestinian militant group Hamas on Israel. The event has increased geopolitical stresses and led to a downpour in crude oil prices and increased volatility in global stock markets. The BSE Sensex, a key equity benchmark, dropped by more than 337 points, representing a 0.51% decrease, reaching a level of 65,656.71. Similarly, the NSE Nifty, another important market index, fell by over 100 points, or 0.52%, to reach 19,552.20 on Monday. Further increase in the Israel-Hamas conflict could have a meaningful impact on Indian stock markets. Now, the key concerns of all these include a rise in oil prices, which could lead to increased inflation and worsened price changes in the rupee and bond yields, affecting financial stability. Israel's TA-35 index, which tracks top companies on the Tel Aviv Stock Exchange, already saw a significant decline of 6.47% on Sunday due to the rise in geopolitical risk. If the conflict continues to worsen, it could lead to higher oil prices and greater price changes, with potential long-term effects for the oil market, including sustained reductions in oil supplies. These factors collectively contribute to the tension and potential economic effects of the situation. The chance of a third front involving Iran is a major concern, as it could lead to a sharp downpour in crude oil prices. Looking at the technical aspects, the range between 19,300 and 19,250 is an important demand zone. Until the market finds stability within the range, it is likely to move sideways with an important barrier at the 19,800 level. Should it drop below 19,250, it could trigger a healthy correction, potentially reaching down to the 18,800 level. Investors are closely monitoring these levels for market trends and developments. Short-term traders are cautious and do not rush into trades, given the current uncertainty. A meaningful correction could present an excellent buying opportunity for long-term investors. The price of US WTI crude oil has rushed by 5.1% to reach $87.02 per barrel, while Brent crude futures also rose by over 5% to $44.76 per barrel. The sharp rise in crude oil prices has the potential to affect domestic inflation and keep interest rates at high levels for an extended period. Foreign institutional investors are consistently selling due to higher bond yields, and the added pressure of high crude oil prices could worsen the situation. The nature and duration of the conflict, as its longevity, could have a significant impact on the financial landscape. Sectors like paint and chemicals in the stock market could be impacted in terms of their profit margins in the short to medium term. The surprise attack by Hamas has brought Israel-related stocks into the global spotlight. Companies like Dr. Reddy's, Lupin, Torrent, and Sun Pharma, which have important stakes in Israel's Taro Pharmaceutical, and also they might experience changes in their market performance. Similarly, entities such as NMDC, Kalyan Jewelers, TCS, Infosys, Tech Mahindra, and Wipro, which have operations in Israel, could also see impacts on their market performance. In response to these developments, the market has experienced a sense of panic, leading to an outstanding increase in demand for safe haven assets. This downpour in demand has driven up the prices of various commodities during the morning trading session. From the viewpoint of the Indian market, economic growth remains strong, and investors may view any market dip as an opportunity for potential investment. The downpour in crude oil prices also poses an important danger to the global economy, as it can lead to high inflation. Countries like the United States, India, China, and other major economies heavily rely on oil imports, and if oil prices stay high, it can result in high import inflation. So, when oil prices rise, it increases production costs for various industries and raises energy expenses for both businesses and households, eventually pushing overall inflation higher. The combination of high energy prices and occurring inflationary trends could challenge the efforts of central banks to manage and reduce inflation. This may lead to interest rates remaining at high levels for an extended period as central banks work to counter inflation stresses. Now, the concerns regarding higher interest rates are casting a shadow on the outlook for global economic growth. The clear sign from the U.S. Federal Reserve that another interest rate hike is likely, and the possibility that rates will remain high for an extended period, has disappointed investors, who were hoping that rate hikes had reached their peak, and central banks might consider cutting rates. This means that central banks are more focused on controlling inflation and are less willing to encourage economic growth through lower interest rates. It reflects a change in monetary policy priorities toward managing inflationary stresses, which can have wide importance for investment decisions and economic expectations. The Israel-Hamas conflict has had an important and surprising impact on the Indian stock market. The rise of geopolitical tensions, along with the downpour in oil prices and other market variables, has created a challenging environment for investors. What do you think of the current state of the stock market? Let us know in the comments section below.